Hey traders, welcome back to another weekly recap video. So let's break down the entire week, recap the whole week again. So this week I took a total of 10 positions. Later on I'll show all of you all of my trades, and I secured for about 10.24 R. So in terms of P&L, probably about 25k. Yep. So if you look at the DXY, overall we are on a massive downtrend, and that was pretty much our entire thesis on the week. On Monday open, we got that DXY tested a 104.50 on last Friday, and Monday we were expecting a drive down. And then on Wednesday, when price pulled back, especially on Thursday, London's New York session, we got that retest of that 104.07, which was exactly what we discussed in our day-to-day setups breakdown video in our daily update as well. So if you're watching this from YouTube, just understand that I do run a community called the 1%ers Trade Club. This is a place where I teach my members on how to get consistency, how to build the correct approach, correct mindset, how to discover and explore their own edge as well. So yeah, so that's pretty much it for the XY. Everything was correct. We even talked about price holding under that 104.05 level and really just tested and run. So move on to the JPYX. JPYX, I was correct at the beginning of the week until Tuesday to Wednesday, and that was thing really just took a turn and I was completely wrong. Because this week we had a massive pullback on the beginning of the week, breaking above two minor structure. Remember, two levels that we broke above. One was 748, second was 750. I never expected JPYX to reverse all the way up, but what I did expect was when price pulled back a little bit, I thought it would continue pushing higher, because that was a beautiful higher lows as well. Very nice short-term strength. I was expecting a lot more strength pushing price higher, but it didn't happen. On Tuesday, New York session, that was when we just took a massive dip. Then we just continued going lower and lower and lower, and that was when I was caught wrong. And this week could have been a lot better if, frankly speaking, if I was being a little bit more neutral on especially pound yen. I showed the pound yen multiple times. Obviously, I still had most of my win this week were contributed by pound yen. But later on the week, especially Wednesday, Thursday, and Friday yesterday, I really just sort of made some mistakes here and there on pound yen, and it's really not worth it. But before we go into pound yen, let's talk about pound dollar first. So pound dollar, as y'all can see, I only took one position, and it wasn't a very good position. I'll say it was a good position in terms of my entry, but I closed out the trade early because of my rules. So there's nothing to complain about this trade. So some of you may know, some of you may not know, one of my biggest rules is I never will hold a position if I realize that is a flag going against my trade. So just a quick example, if I were to go long, I can't afford to see price form a bear flag against me. Why? Because flag is something that I backtested the most, and the success rate is as high as 70%. On some specific season it drops to 60 to 65, but the probability is there. Statistics cannot lie, and based on my own experience, it is always a wiser choice to close out a position if you realize that there is a flag going against it. So that was exactly what happened on this trade. I entered based on a TPF entry. Again, if you're watching this from YouTube, you might not know what is a TPF entry. It's a very high profitable strategy that is discussed in our community. So basically just saw price do this. We got a nice continuation, very strong drive to the upside. We got price testing previous structure, taking out the low. We got massive weak rejected this 124.62 area as well. That was when I caught a TPF entry, but after I entered the TPF entry, I realized there was one problem, which was price was really slowing down, and it sort of defended that 124.73. So if you're our trade club members, if you're watching this, obviously you can see that was a bear flag forming against us. Tested at 124.74, just a massive long consolidation. That was when I have to get out of the trade, just as per my management rule. Have to get out. Turns out I just closed out for, I think, just $200-300 profit. Just call it a break even, and price eventually just pushed all the way up, giving me about 4R ish, right? About 4R. My initial target was right at there at the high, so that's about a 4R trade. But overall, still, if you look at it from a hindsight perspective, you will say, oh, it's a bad trade because you closed out the trade too early. You are in fear. Not really. All right, so everything was as per our rule. Long term wise, if I could keep doing this, I know I will be a lot more profitable. I know it will avoid me doing a lot of silly mistakes, silly management mistakes. That was the first trade on pound dollar. Nothing much to discuss. What was interesting was how I was able to capture close to 89R in total if we deduct some of the losses here. Bear in mind, I do have my own system in allocating risk, different risk type on across different setups. So everything that you see here, I don't risk the same. I have a linear risk per trade approach where I do grade the quality of my setups as per my own system, as per my own criteria. Then I allocate risk differently. Some of the trade I only risk 1%, some probably risk 2,000, some high quality ones I'll risk 3,000. So that's how I normally just allocate my risk. That's what we call a linear risk per trade approach, right? A lot of people, they are using a fixed risk per trade approach, which I think is perfect for newer traders. When you're more advanced, you need to learn how to be able to have the eyes to identify high quality setups, the A+ quality ones. Then you need to know how to adapt to the changing market condition and size up when necessary. The most profitable traders are not those who just stick to, for example, that 0.5% risk per trade, 1% risk per trade, and they're just being so fixated on, I can only risk 1%. No, that's mainly for traders who have not found consistency yet, or traders who are still stuck at that consistency, not really that profitable yet. Once you know that you are profitable, you need to learn how to scale. All right, and sizing up is the only chance that will allow you to scale faster at a much faster pace. So opening of the week was when me with my trade club members, we realized that market was in a rollover previous week. Then price pulled back, tested one of the OMSS level. I won't go deep into this concept. Tested the OMSS, dropped all the way down, and that was when it really took me some time to sort of think, hey, we have price tested the OMSS on the Asian session, especially is on a Monday opening Asian session. Normally I just won't get it, all right, because normally just the volume was just not there. But surprisingly this week we have the strong opening drive on the Asian session, tested 186.76, reversed, and that was when in the London session I caught a bad flag here. A simple just test the OMSS drop, strong drive to the downside, clear momentum, clear intention as well, pull back into 186.15, tested the previous structure, bear flag formation, EMAs also aligning with it, tons of confluences, took the bear flag, was able to take it down here, as you all can see, took it down to this low, and it was a just really clean flag trade, secure about 4.1, and then after price broke through it, dropping down to the 5 minute, all of you can see it was a simple BNR setup, a break and retest setup. Also testing this price structure, see that, and I just took a sell to the downside. So these two trade itself has given me 7R. I lost one trade trying to play with the continuation, but the entry was a little bit rushed. Even in my community, I told my members that I was a little bit rushing my entry here. Then after I got stopped out, I walked away for a while, reassess the market and think, is it really worth it to still go short? And the answer was yes. That was when I continued taking one more short after seeing the slowdown in the price action. After seeing that our price action was slowing down, we got multiple rejections of the high, tested this 185.41 structure. I took a short 20 pip stops, and eventually it still dropped all the way down in the following Asian session, giving me a 3.97 R. I manually closed out the trade at the previous low because I realized there was a lot of rejection, and that was when my bias just kicked in and I was completely wrong about the market. So as you all can see, when price have clearly tested this major support at 184.63 and it clearly reversed up, that was when this wave, maybe I wasn't able to catch it. It's fine because none of us are flexible enough to say, hey, I'm gonna flip long immediately. No, that was sort of gambling as well. So when it started reversing at 184, just 184.65, this key support level, I was still way too fixated onto the sell. Gotta be honest, full transparency, I was way too stubborn with the sell, and it turns out I missed out this entire few hundred pips movement. See that? 350 pips move. So when price pushed up, stayed above that 186.15, that was really just when I should have followed along, tag along the buys. You see, if market were to be bearish, it could have just continued staying under this 185.53 zone, right? But why did it continue pushing higher? That was when we sort of can get the clue of what the market is doing. We are completely reversing back to bullish, continuing the higher time frame uptrend, because the 4 hour have been on an uptrend as well. That's why, yeah, that was when I was really caught biased, and this again was a clean flag trade. If I were to remove all of this, I'll just remove all the distractions here. So if you all look at the price action here on the 15-minute, we got a strong drive, we got a nice hold above that support at 186.36. I could have gotten long. It was so bloody straightforward trade, just trading the pullback, equal low rejection, take it to the upside. That's when I took a short here after seeing that 1, 2, 3 triple rejection of that 186.93, matching with one of our OMSS level. Then yeah, price dropped into my favor for about 2R plus 2.5R. At the peak it was 2.5R. Then after it reversed, I realized that I was wrong. I closed out the trade for about half an hour profit, continue pushing higher. Even on Friday, yesterday, I was still fixated on the sell. I was again correct for about 2.5R, and when price just formed that continuation pattern, can you see that continuation? I was still fixated onto the sell, despite knowing that that was a clear 5-minute, a clear equal rejection, a nice bull flag scenario here. We got a drive, we got a sideways consolidation, we got a TPF trigger here, and turned out it completely reversed and it tapped me out for about 1 hour loss. So I was way too stubborn with the sell, gotta admit it, but still cannot deny the fact that I have a pretty strong performance on GJ, identifying the short-term sell. It was until Wednesday, Thursday, Friday, that was when I was, because I had a massive win on Monday, on Tuesday, and I was just so caught up with the direction, because when I always say this in our with our members, with my students, if you're correct on the direction, don't flip your direction until market proves you wrong. And in this case, market have already proven me wrong multiple times. After that short, the small profit day on Thursday, I could have been quick to realize that this is still on an uptrend, and I could have just tried to find entry to go long, try to find confirmation to go long, instead of just keep trying to trade reversal, because this one really just doesn't match any key level as well. So I was a little bit too biased, And that's it for pound yen. Still a very beautiful week. All of you can see, although I was biased onto the sell side, I didn't do any damage. I only lost one trade here, and the win here was well over 10R, so it's nothing, right? Pound Aussie and Euro Aussie was when I also made a bit of mistakes here and there. Let's go to Pound Aussie first. Pound Aussie, this trade wasn't totally bad, gotta say this. 4 hour wise, when I was looking at the chart, it was looking pretty clear to me, especially when the EMAs were pushing down. What's wrong with this trade was my price position. Alright, price position is basically where is your entry price as compared to the nearest obstacle. My entry was here, stop loss was about 23 pips, and if I were to be realistic, the risk reward was just bad because I was shorting near this major low at 190.22. I always recommend all my students consider your price position before you take up any new trade, because price position will ultimately determine your risk reward ratio, the risk reward potential as well. I took a short there, sort of neglected the price position, and it turned out to be a really bad trade, as in I just got tapped out immediately, right? Price pullback, tap my limit order, and just completely reversed all the way up, and that was because of the pound PMI news as well. I even held the position through the news, and I got tapped out for about a 1 hour loss. Realistically speaking, this was just in terms of the follow through, it was just bad. The thesis wasn't bad because I was just trading the break and retest, as you all can see. The break and retest on this 190.63 pullback tapped me, just completely stopped me out. So it was a quick loss. Conclusion of this trade, bad price position. Shouldn't have shorted this, could have been more patient and wait for price to break this 190.23 low before I go short, but I was a little bit too aggressive. Then Euro Aussie, I took one trade of the week. It was about 2R. It was a rather simple setup, but I'll still say this: Euro Aussie is slow as hell. So I'm glad that after I took this trade, I just stepped out of that Euro Aussie. When I took this trade, price action was pretty clear. It was until I'll say late Thursday, then Friday, that was when Euro Aussie was just caught being in a grindy movement, just keep chugging all the way down along with the tagging the EMAs. So I took a sell here after I noticed price was clearly breaking under the 166.89. Then EMAs also crossing bearish, as you can see. 20-50 EMAs are pointing bearish. We have clear direction. That's when I took the sell and secured about 2 hour, pretty fast trade. After seeing that rejection at 166.90, saw that rejection, nice bounce, I just took the sell, stop loss above the high. Then it just dropped into my target. And what happened after I closed out the trade was market just turned into a complete volatility contraction period where looks like we're just dying. But at the same time, if you look at the 4 hour, this type of squeezing price action normally will lead to a much bigger rollover, a much larger snowball effect. And yeah, quite interested to see what's going to happen next week on Euro Aussie, because me and my members, we've been talking about EA short the entire week, and it still turned out well. I got one or two members still holding EA short. Overall, still, yeah, very good scenario. And the last one is actually dollar CAD. These were 5 main pairs that I traded across the week: pound dollar, pound yen, pound Aussie, Euro Aussie, dollar CAD. These are the only 5 pairs that I traded. And overall, it was a good week on dollar CAD as well. I was over bearish. Why bearish again? Simple breakdown. We got price rejected this key daily level at 138.37. And after that, I told all my members that we are seeing lower high formation. See, lower high, lower high, lower high, lower high, lower highs. Seeing all of these low highs doesn't give me the confirmation to go short. It was how price kept failing to revisit some of these old highs that confirms that we are in a potential downtrend shift, because majority of the people, they are still going long, and that's not what I'm doing here. I much prefer to go short. after seeing what price is really trying to tell me, all the clues here, all the failures around this 137.48, I decided to go short. So put on the replay mode. As you all can see, price tested this 137.46, rejected, reversed, and that was when I really took the sell. And it was a simple limit order trade, break and retest, entry at 136.90. I got tagged out immediately. It was just it was just a wrong timing. But remember all of this, if you're watching this video, wrong timing doesn't mean you are completely wrong about your thesis, the setups. A lot of people, the biggest mistake is they take a loss, they just completely throw their game plan off the window. Sometimes it can be a wrong timing, and this is a great example as well. Wrong timing, but here we are, form a double top, continue dropping down, and right now it looked very clear. After seeing that drop, again put on a replay, look at the 15-minute, nice drop, broke under 136.92, decided to give market a second attempt on dollar CAD, and it turned out pretty well. Alright, smashed my target for 2.87R. I have to say this, I was trying to avoid the news because yesterday we got PMI releasing about 1 hour after I closed the trade, but price decided to not give a lot of just no reaction on the PMI. I should have held it because my target was actually to hold it into 135.86, although it didn't hit that. But yeah, it could have been at least a 6R trade, but I secured a 2.87 following my game plan, so no complaint here. And yeah, following next week, we'll see how it goes. That's pretty much it for the weekly recap, and I hope all of you learned something new. Apologize for the messy hair because I recorded this when right now it's actually around 6:30 a.m. So yeah, just a beautiful week. Again, secured about 10.24R, about 25k ish. Yeah, I don't really check my P&L actually, so I'll talk to you in the next video. Bye bye.